All right, stock market analysis, S&P 500 short-term view. We're going to look at the 1 to 3 week view, maybe a little longer. First, some little important information. This slide gives you the information on our analysis. So just take a moment to read this. Maybe stop the video and you'll be able to learn about our style of analysis and what's important to you to understand. All right, stock market. We're going to look at the stock market analysis S&P 500 short-term view, 1 to 3 weeks, and maybe a little bit longer. This is a great cycle analysis lesson that I'm going to give right now. And for those of you that have not learned about cycle analysis, please go to askSlim.com. Go to our top navigation where you see workshops and click on Cycle Analysis Workshop. That will then give you an informational video and show you what's in the 20 plus modules of the teachings that I have written. You'll just be amazed by what's in there. So watch the free video on there and you'll get a good idea. So let's now switch over to this lesson in cycle analysis, and then I'm going to show you the S&P 500. So we're going to look at bonds in the TLT, Euro, and gold correlations, and what that means. So this is a TLT chart. We are looking essentially at the 20-year bonds. And for those of you that are brand new, what we do is cycle analysis. On the bottom are cycle brackets. These are simply a guide to help us see the energetic movement in the markets. A cycle is measured from trough to trough. And what it essentially shows you is the repeating patterns of flows of money. Now, the actual formations of the cycle are tracked up on the top on the price chart. So when a chart forms, when a price chart forms a certain way versus what the ideal formation would be, as we look at this in multiple time frames, we get very important information. So when a cycle peaks on the left side of the ideal, as this one did right over here, it's called a left-hand translation. You can see that LH translation listed there. What that tells you is that there are energies that are pushing on the downside and caused an early peak. Then when it breaks the key cycle low support, it is configured negatively. And that says there's a high likelihood that the energetics, in other words, the momentum conditions coming from the longer time frames, the longer components that exist on the weekly chart or even monthly chart, that those are pushing to the downside. What that causes is brief upside rallies and long declines in the cycles. That left-hand translation, as you can see here, was swamped by the negative momentum that occurred. You could see the slim ribbon and the slim ribbon PO and the downside resumption signals. These are included in your level 4 membership if you sign up. This then tells you that as it broke down under this key level where it began that cycle, it was likely to fall all the way through the bottom of the cycle. Just blows your mind when you see that. Then momentum staying negative, you had the next cycle swamped. Just unbelievable. Now something changed in here. And this cycle had a right-hand translation. It peaked way on the right side, and that essentially was swamped by upside momentum. You can see this turn green and that upward resumption signal right there, and that said the next cycle was likely to move to the upside, and moved up here to some very solid gains and then began to turn down again. Now something happened in here. This is a positive cycle, as you can see right in here, and then it rallied and broke that low. It created a left-hand translation. What that was a very early peak and then came down and broke the key low, and it says it's likely to decline to this time frame, which is out here into the 2nd or 3rd week of March. It could have another negative cycle here, which would then take you out to the beginning of April. We're not sure about that, but the key thing that we're looking at in here that we want you to understand are these left-hand translations and the breakdown of that cycle and how that set up this decline that's going in right now. So the TLTs, the bond market, has been in negative condition. Now the stock market has not liked that. in the last year or so when the bond market goes down because interest rates go up, and then you get this sense that the Fed is going to remain tight. So you had in here this breakdown that occurred and then it moving down. Now, when interest rates go up, then what happens, and you get a negative situation in the bond market, that's occurring, and it brings an appeal to the US dollar. In other words, money wants to go to the US dollar because of the higher interest here in the US, and money seeks, to where it can get paid the most. So, and then when the markets are moving down, there's a little bit of a flight to safety bid. That would make the dollar go up against the euro, or the euro go down against the dollar. Let's look at the EUR slash US dollar. And the reason I'm going to this is because you can see that the euro, when the dollar fell, the euro put on all of these beautiful cycle patterns. Positive cycle, upward momentum, slim ribbon PO telling you upward resumptions. Fantastic. Look what happened right in here. A left-hand translation, which supports the rising dollar. This is likely to decline out into mid-March again. Interestingly, how that lines up with the bond market. This is a very negative occurrence. See the slim ribbon PO turning red as the slim ribbon gave you this negative signal right there. Remember, these are momentum indicators, and our market condition monitor will give you all of this information by becoming a level 4 member before March 5th. If you're an existing member, you'll already get it. So this left-hand translation is very bad. It supports the rising dollar because the euro is 57% of the dollar index. This says that you're likely to have a rising dollar through sometime in mid-March. Very interesting, because if you remember, we've talked about the stock market period of risk out into mid-March. Let's look at one more thing in here, because we've talked about gold moving down, and Arby showed you this chart earlier in the show. Now you could see the weekly analysis if you then go there and watch that analysis in the full market week show. This is just amazing because you had this beautiful, powerful cycle right over here. These yellow areas are areas where it's likely to correct. This was a very strong cycle, positive momentum. Look at these signals telling you upside resumption by the slim ribbon PO. And now the negative occurrence and this left-hand translation in the gold market. This says gold is likely to decline, probably to the bottom of the support level, or just under 1800. Yes, into somewhere around the second, third week of March. Amazing alignments as you see these negative conditions going on. That is all in alignment with money flowing into the US dollar, out of the US bonds as yields begin to go up, and very, very consistent with the liquidation that is going on because of the sense of of a recession coming and higher interest rates. You could see that in light crude also, which is significantly lower here on Friday, down 3 to 4%. So this is all very much in alignment. So I hope that that gave you a good understanding. Now, again, go to askSlim.com, go to our workshop tab, and you can learn more about that style of analysis. But now I want to show you what's going on in SPX, in the S&P 500. And this is another left-hand translation. I'm not surprised to see this. Now, this upper track right over here, and I left this in, we had it labeled as the lowest probability. This really needs to come out because there is your breakdown right over there, and this is your left-hand translation, just like we see in the other markets. Now, I want you to note that we had a positive slim ribbon PO giving you these upside signals. Here was one right over here, and now it's failed. And we've had this number in here for our members, 40, 60, 79. If it got below that number, it is very likely that the intermediate period of risk that we have shown for quite a number of weeks, even months, has now been entered. And that the decline that we're looking for could be, you know, modest, and modest would be down here to 39 and a quarter, another 130 points or so on the downside, down to this support level here around 38.40. That would be a normal projection in here, but originally we had the potential for it to get back down to 3,500, and that discussion needs to be reopened. The only way to change this would be if the market was able to rally above that high at about 41.60. That would heal this condition and tell us that this was false. The probability of that is, based on everything I'm showing you, is probably only about 15 or 20%, with a probability that's in the area of 70 or 80%, that the decline is now set, and that the potential for the movement into the support zone between 39 and a quarter and 38.40 is very likely, with the potential of it being much more severe to the downside. Again, remember, the market always has the ability to heal itself, and that number we would look for would be above that number, about 41.60. This is quite a negative scenario that we're looking at right now. I want to note that the Nasdaq has not broken this level yet. We really would like to see the confirmation of that, and the Russell's even a bigger distance from it. But the Russell has the biggest risk with interest rates going up because it's made up of the zombie stocks, the stocks that have to borrow a lot of money, and as interest rates go up, it's bad for them. So I would not be surprised to see the Russell, the RUT, or the IWM accelerate soon to the downside. You may get some failed rally attempts in here that don't get far, but I think the switch has been flipped and the market has gone from buyers to sellers. This is an important breakdown. The market could fix itself. I doubt that's going to happen. That's a look at the S&P 500.